say 1 of 20 because I'm only trading 1 out of my 20 accounts instead of 20 of my 20 accounts.
All right, sorry. Is Powell speaking this afternoon? Yeah. Powell's speaking. Let me make double check. I think he's speaking at 10 a.m. Forex. Let me double check. Powell. Yeah, 10 a.m. Powell speaking at 10 a.m. So at the Jackson Hole Symposium. So I think he's expected to actually talk about. He's going to be talking about rate stuff, and so could be some pretty volatile action around 10 o'clock. So you got to be careful for 10. All right, so 15-minute, right? We got this pre-market high up here. It's pretty interesting area paired with that 200 EMA on the 15-minute time frame. Other than that, the next kind of area of interest is down here. That would be pretty interesting to see so far. If we get down there, we got a bunch of liquidity down there. It's tapping into this gap right now, so price is kind of taking out all this kind of internal liquidity. It's tapping into that gap and it's starting to push back up. So if we drop to the 1-minute time frame, got those two levels kind of marked out. Yeah, got those two levels marked out. Let's kind of see what price is going to do once it takes out pre-market highs. Let's see what how it's gonna set itself up. Actually, we're looking good. I prefer to maybe take a trade before 10 a.m. Hopefully. We'll see what happens, how it sets itself up. But I'm going to be careful around 10 a.m. because these accounts that I'm trading are my funded accounts right now. So I'm going to be careful with these accounts. This is the fifth. This is the 1 minute. But we have I was using the 15-minute to mark out the time frames. Could be good though. Yeah, it could be good. Just gotta be careful. If you do take a trade, you gotta make sure to, have your stop set in place just in case he says something. You just never know when he's talking how price is gonna. You gotta be extra sizing down is smart. Being extra careful. All right, let's see how this sets itself up. We just took out pre-market highs, so 1 minute candle closes, and we still got like 45 seconds left, so we still got some time. Hopefully, it kind of leaves behind this bearish gap. I would be interested if it leaves behind a bearish gap in the market. We'll kind of see. I would kind of like that. I'm gonna get my drawing tool set up just in case we. Nope. Dang it! I was hoping we would get that. Hoping we would get a gap to form. Nope. So we're waiting. Still nothing. It took out the pre-market highs, but gotta be patient for the setup. We're starting to kind of dip down. We got VWAP down there. We got the 200 right here. We got the pivot. We got VWAP. Kind of bunch of big levels stacked on top of each other. So, got to be careful. I was thinking of sell today. Possible. It is definitely possible. We'll see how price reacts here, since it's at pre-market highs right now. So it took it out. It could start to sell off from here. It's possible. I mean, I'm not getting any setup so far unless it's something, something happens still, but I'm going to allow it. Price to kind of. We're above VWAP right now. So as of right now, we're pretty bullish, but it just depends on if price is going to keep ripping through pre-market or it's going to sweep pre-market and start tanking. Because you could see what price kind of, on the 15-minute, you see what kind of happened. Price opened up, took out all this liquidity, and then tapped into this 15-minute gap, and now it's ripping back up from that 15-minute gap. Like I said, we got liquidity all the way down there. That's going to be pre-market lows down here. Other than that, I mean, don't got much other stuff really going on there. It's breaking, trying to break through. Next 15-minute candle opens up in about 5 minutes for the new 15-minute candle. So let me go to 1 minute, see what's going on here. It's still pushing through. Think it's gonna range today? That's possible too, yeah. We may not get any like big continuation moves and maybe like stuck in a kind of range day. It's possible. I mean, I didn't think it was a big like speech today, but apparently it's actually pretty big. He's actually supposed to be talking about the economy and stuff like that, so. But if I get a setup, I'll take the setup. But we still got like, you know, we got time till 10 a.m. I wouldn't mind, you know. See what happens. But I'm gonna be sized down if I do take a trade. Kind of like this. So we got a gap forming right here. There's a gap on the 1 minute. Pretty big size gap. That's a pretty big gap. So we got that gap on the 1 minute. If we do get a V-shaped reversal out of this area, I mean, I wouldn't mind taking a short if we do get like a V-shaped reversal. Meaning, what a V-shaped reversal is if price automatically just takes a big dump down, you know, and starts closing below this gap. We'll see. Still ripping though. We got 3 minutes till that new 15-minute candle opens. So depending on how this 15-minute candle closes, we'll see how it, you know. So far it's pretty strong. We're starting to get a little bit of rejection, but and then you could see what's going on the 15-minute time frame, right? It's all. So 15-minute candle is still pretty strong. So if it closes pretty strong, right? We're not getting a sweep. So we'll see what next level. We got another level up there. Pretty much these stacked. Oh, we got a bunch of stacked highs up here. If you see on the 15-minute time frame, we got a bunch of highs stacked up here. So let me mark that out because that's a big level too that I would be interested in potentially if price doesn't hold pre-market. So let me mark out all these stacked highs. And it pairs pretty nicely with that pivot point right there. Let's see. Trying to align it perfectly looking. Alright. So there it is pretty much so far. What do we got? 2 minutes left. So that's kind of the next area obviously if we don't get a V-shape out of this. All right, I'm just playing price action. Whatever price is doing, I'm not trying to, you know, not trying to jump ahead of price. I'm just trying to see what price is doing and then take reaction. All right, we got 1 minute left. So this candle, 1 minute left. Less than a minute, actually, 30 seconds left. You see that big rejection? So let's see. Let me go back to the 15-minute time frame right now. So you can see we're starting to get a little bit of a wick, but nothing really. These are my funded, so I'm going to be pretty patient with these. I'm not going to... Alright, we're closing strong. So we got getting a close 5 seconds for the next 15. So you can see 5 seconds left, and we're closing strong. So pretty much... this sweep gets invalidated, right? So I can take off this box right here. And then, right, you look on the 15-minute time frame, you see we didn't get a V-shape out of it. We didn't get a sweep. We're getting a big close above that level. So I'll see my next level, see what happens there. That's fine. What I like to see, right? Ideally, what I like to see for this setup is I have a major level, right? Price kind of comes up to this major level, taps it out, so it sweeps this major level, and then we get it like almost an immediate V-shape reversal. So it sweeps it, and then a big red candle down, closing below a IFEG. That's like a perfect setup to where, right, it's sweeping it. As soon as we take it out, I see sellers stepping immediately for like a V-shape reversal out of it. That's what I like to see, ideally. And that's kind of confirming that a lot of people are stepping in at that level. Versus like, versus like this, right? It almost like, it does sweep it, and we get a big sell-off, but there's no gaps to kind of go off of. So I just honestly, I don't know how price action is gonna be. I mean, there's like, is this? Don't tell me this is gonna be like the V shape out of it. See, at this point, man, this is invalidated for me. Even though it's starting to close, it's starting to get like a big red candle down. The problem is now is if you look on the 15-minute time frame, it's not a sweep. It's a, like, we could easily push down. Now this is kind of holding as support, right? This old area of resistance, now that it broke through super strong, closed above it, now it's pushing back down to hold it as support, right? And you can see it's exactly what it's doing. It pushed down aggressively, holding it as support to go back up. So old areas of resistance, when they break, they become new areas of support. So that's why now that it closed very strong on the 15-minute, it's invalidated. And even if this ends up tanking below here, I still wouldn't take the trade. Is there one thing you would tell yourself when you first started? What you would say? So trading is it's a long-term game, right? A lot of people, I think, look at trading the wrong way. People look at trading as if, right, they see all these influencers, right, flexing their whatever Lambos and whatnot, and they want to, like, most people with trading, they want to get rich quick, get rich quick, get rich quick. This is a long-term game. So what I would kind of tell myself is take it easy, take it slow. Don't try to, go heavy size in because you're trying to make money fast. It just doesn't work. It's a long-term game. The longer you stay in the market, the longer you watch the market, the better you get at it. It's a patience game. It's, if it takes you 3-4 years, even longer, that's fine. But what you don't want to do is, blow up so many accounts that you can't trade anymore because, like I said before, I saw a video, right? I saw a video the other day, and a guy posted a video, and he's like, man, I've been trying to trade for I've been trading for it's like 2 or 3 years. Like, I've been trading for like 2 or 3 years already. I blew my funded accounts today. Pretty much, like, how do you blow your funded accounts in one day? Like, your mindset is wrong. You're trying to get rich quick. If you're buying and blowing funded accounts in one day, you're sized in way too heavy. So the biggest thing, going back to that question, the biggest thing I would change that I kind of screwed up on in the beginning is when I started trading, obviously this was before like prop firms kind of were a thing. I started trading in options and I was putting in real money. And when you're learning, you're going to lose, right? You're going to lose money when you're learning. So I should have stayed on a simulated account until I had a strategy that I was confident in. That's what I should have done. But obviously I was putting in real money and I was losing it, and it was yeah. But when you're starting to learn, the goal is to lose as little money as possible because you're learning. So losing is going to be a thing in your trading. It goes from losing money to being break even to being profitable. All comes down to finding a strategy and staying consistent. Yeah. So here's the thing. I was actually thinking about this yesterday, right? All right, we're starting to push up to this. We'll see how price reacts off this level up here. I was thinking about this yesterday. In my opinion, right? Trading isn't hard because it's not the psychology that's the hardest part, and it's not the strategy that's the hardest part. In my opinion, I think the hardest part about trading is like the adaptation that you have to have. Meaning, and what I mean by it is, right, the market is always changing, right? If you've traded during when Biden was president, during when Trump was president, it's a completely different market, right? So price action is always evolving, it's changing, sometimes it's super volatile, sometimes, you know, it's taking out lows, sometimes it's not taking out lows. It's just, market is changing, right? So what happens a lot of time, you can have a strategy that works very well for like a couple months, and then all of a sudden it doesn't work as well. Say when tariff news came out, it's not working as well. So the hardest part about trading is making those little tweaks, realizing that your strategy is not working as well as it was, and watching the market and seeing what kind of tweaks you can make in order to adjust for how the market is moving at the time. And those adjustments are the hardest part. Some people just follow their strategy consistently the whole time, and then, right, it's profitable one time, and then it stops being as profitable the next time. And I think, like, that's a big part of trading and being able to make those changes in your strategy. Now, I'm not saying change your whole strategy. I'm saying adapt in a way to make minor changes in your strategy, potentially, to improve your win rate based on the market conditions at the time. It's basically psychological. Everyone reacts different to price action. Yeah, I mean, a big part, I think the psychology part comes into, like, right, when somebody loses a trade and they start revenge trading, or that's when the psychology really hits. What a lot of new people struggle with is, right, they have a strategy, but because you're new, and this is what's weird about trading, that's completely different from every other profession, every other thing you do, right? Say, I also, like, if you've seen my lives, I talk about it. I buy and sell cars for a living too. So, right, in that business, the more you work, the more money you make, technically, right? Trading is completely different. The more you work sometimes means you lose more money. So it's like, trading is like a base hit type of thing. You look for your setups and you walk away. So what a lot of newbies kind of get hurt by is when they come into the market, they have their setup and they want to take trades. They're not patient for their setup. They're seeing, oh, price is moving up, all right, I'm gonna buy in, even though it's not my setup. And it really screws them up in the long run. It like prolongs to how long they become profitable. And like me, for example, I used to be like that. I wasn't able to come into the market to sit there and potentially, if I don't get a setup, to walk away with no trades. That was so freaking hard for me to do. I had to take a trade because I felt like it was a waste of time. If I was coming into the market and I didn't trade, it was a waste of time. So you know, now I'm completely different. Now I can wait for my setup. I could sit there. No lie, I've waited 2 days. Like, there's certain times in price action where I would come in, no setup. I would come in the next day, no setup. And it's like, sometimes it's freaking hard sitting on your hands for that long and not taking a trade. But in the end, then you end up having a really good day and price action is awesome, and then you get, you know, a couple good setups. So we win to lose. Yeah, the problem is people take dumb trades. That people have a strategy and no one wants to follow their strategy. Everyone wants to kind of just like, you know, just buy and sell and get that dopamine hit, right? It's a dopamine hit. Every time you enter a trade, you get that dopamine hit of potentially making, you know, good money. I made 4K easy work. I mean, if you think it's easy, you must be some freaking Because trading is not easy. I don't know. I think it's... And some people think like... Some people have a strategy, right? And in a little bit of a season, their strategy works perfectly. Like, man, this is like... It feels like the easiest thing in the world. Trading. I don't know how people can't... You know... People can't make money long term in this. This is so freaking easy. And then... comes a little bit of a season in trading where you go on a losing streak. And that losing streak... It's not if it comes, it's when it's going to come. It's going to come, that losing streak. And how someone handles that losing streak will determine their future in trading. I've had this, and I'm speaking from experience. I remember when I used to trade options, I went on a 2-week winning streak, meaning I didn't lose a trade in 2 weeks. And then guess what happened? In one freaking day, I lost everything I made in 2 weeks because I failed to accept the loss, and I just held that loser, held it, and that was the day when the market tanked, and it just kept falling for the rest of the day, and I lost all the money I made in 2 weeks in one trade. So that's what really will determine being able to take a loss and being able to go through drawdown, because you will go through drawdown. Is it in 5 minutes? Holy crap, it's in 4 minutes. Oh my gosh, I was hoping we can whatever. Now we're starting to. A lot of support down here now. I mean, been there before. Yeah, I think it's like, I feel like it's like almost every single trader goes through that kind of phase. And it just depends on what kind of person you are. For example, me, I'm the type of person, a lot of times I'm learning from my own mistakes, right? Like, it's like in the back of my mind, I know I shouldn't do that. But it's almost like I have to learn the hard way in order now for me to be like, okay, now, you know, I'm not going to do this anymore because, you know, I got wrecked before doing this. This is where the poor get poor. That's exactly true. That's exactly true. And that's why beginners, that's why I say, if you're a beginner in trading and you're learning how to, look at that sell-off. I was looking for this before. I was hoping for this kind of a dump, you know, as price swept it and then the dump, not like closed heavy and then but yeah, it's that's why I say newbies, you're people who are just learning how to trade, you're going to lose money. If you buy an evaluation account, you're going to blow a evaluation account while you're learning. So your goal is to, the ideal thing would be trade in a simulation and not invest any money at all until you prove to yourself, and then go to like an evaluation. Or you can go to an evaluation but don't blow it, and you know, don't go through a bunch of evaluations in 1 month. Be sized down, you know, be sized down just enough to allow yourself to learn and go through some drawdown. Because I feel like when you're learning, your goal is to be exposed to the market, to watch price action every single day. That's your goal. The money eventually will come. Your goal as a beginner trader should not be to make money, because you're not going to. You're going to get some wins here and there. Yes, you're going to, but in the end, you're going to give it back. It's learning how to preserve capital and stay out of stupid trades. That only comes from watching price action and understanding like, oh, I'm not going to take this trade because X, Y, and Z. All right, inverse that, man. We got that dump. All right, we'll see. You lose most, you win some. Yeah. Yeah, that's sometimes that's the case. For me, that's like going through a losing streak, bro. You start to question, like, when in your system, right? When you go through a losing streak, you start to question. You're like, what the heck is going on? Am I all of a sudden like I can't do this anymore? But it's just something that everyone goes through. It doesn't mean the strategy doesn't work, right? It's just statistics, right? Losing streak is going to happen. Is he talking already? Holy Powell, stop. Holy crap. Oh my gosh. Whoa. This is what? Screw this crap. This is how you blow an account. 101. Oh my gosh. Where do I go on to watch the freaking... I just want to see if he's on stage already. I want to see if he's wearing a purple tie. Do they have a YouTube channel? How do you spell it? Jackson Hole Symposium. Jackson Hole Symposium. That's where he's at. Oh, they're live. Okay, here it is. He's not even... Bruh. He's not even talking. Bro, Powell's not even talking yet. What is this crap? They need to do this symposium stuff after market closes or some. This is literally like FOMC, dude. This is FOMC price action. Look at this. What? I guess they think he's going to cut. From what I take, I think the sentiment right now is that he's not going to cut rates. That's, I think, what the sentiment. I don't know, honestly, why it's ripping like this. I mean, it's just part of... But the sentiment right now is that he's not going to cut rates. Because the, what is it, PPI, or whatever, I forget what it is. But last week, the data that came out last week is showing that inflation is increasing and not. So, that's the sentiment. Because of that data, they're expecting for him not to cut rates. Yo, this is like, this kind of price action you can make, you know, you can make a shit ton of money, but at the same time, you can blow your account so freaking easily. Trust me, I've blown accounts doing this price action in the beginning. I don't even want to, let me see on the 15-minute, what levels is there? All right, he's talking. Is he wearing a purple tie? He is wearing a purple tie. You know the theory of a purple tie when, like, apparently if he comes out with a purple tie, it's bullish. That's exactly what happened. We ripped. It's the purple tie. That's why the market ripped. 300 points in 3 minutes. That's freaking wild. Like, oh my gosh. Like, for me, there's no other levels to, I mean... Oh my gosh. The only levels I would kind of look for are way up there. Freaking sucks, huh? Alright, let me mark it out real quick. Let me quickly... Alright, we got this level way up there. I'll just bring it all the way over. Alright. Go to the 1 year real quick. Alright. We got a level. For me, I mean, look at that. It's all the way up there. That's the next level I would be interested in. Ugh. I'm on, listen, I'm copy trading 10 funded accounts, so I'm not gonna be stupid. What would piss me off is me blowing these 10 funded accounts. I would be so pissed. I'm gonna wait for a good setup. It ripped because he opened the door to rate cuts. Oh, did he say that? I do monthly purchases after major events. Yeah, this is. What is the R1 on your screen? These are pivot points. I don't know what the R1, R2, I don't know what that means, but I know these are it's an indicator called pivot points, and it just, I don't know how it calculates it either, like the math behind it, but it calculates certain levels, and you can see how these pivot points end up holding. Like, look at this. Look what happened when price came back down. Look at that, almost to a T, bounced off that pivot point and ripped right up. So you have like S2, S1, and they're different. I just use them as gauges, but they work pretty well to understand that price could bounce there. It's very good to have. Yeah, indicators are meant to be used as gauges. Indicators aren't meant to be used like trades off of, right? I don't think, in my opinion, I don't think you should use indicators. Now, if it pairs up with your strategy, that's an extra level of, you know, reassurance. But taking a trade just because it's at like a pivot point or an indicator is not smart. Usually the pivot point uses R1 as resistance and S1 as support with standard deviations. Okay, yeah, well, it makes sense, yeah, because these are, right, like these are red. So this is like a big level, I guess, of support down here. And then this is maybe like balanced price and then resistance up here with the blue. That's what I would assume. I don't know. Well, this is NQ futures. I have custom made indicator shows every money on every layer. Dang. As with the labor market, some of the slowing in GDP likely reflects slower growth of supply. What's the best? Give me a second. Someone's giving me a call. Hello? Estimates based on the latest available data indicate that total PCE prices rose 2.6% over the 12 months ending in July. Excluding the volatile food and energy categories, core PCE prices rose 2.9%, above their level of a year ago. Within core, prices of goods increased 1.1% over the past 12 months, a notable shift from the modest decline seen over the course of 2024. In contrast, housing services inflation remains on a downward trend, and non-housing services inflation is still running at a level a bit above what has been historically consistent with a 2% inflation. The effects of tariffs on consumer prices are now clearly visible. We expect those effects to accumulate over coming months with high uncertainty about both timing and amounts. So with like indicators, I typically I don't like to have a lot of indicators. My main thing is trading price action. That's my main thing. I'm not like too big on indicators because I feel like the more indicators you have, it starts to cloud my, like, you know, one indicator starts kind of contradicting another indicator, and then it messes me up. Versus I can trade with zero indicators. I just use them as, like, you know, as if I'm in a trade as gauges. But the best book you read about trading? I haven't really read any books about trading. I mean, there are some really popular books that I know of. That Best Loser Wins is a really popular trading book. I'm more of like a visual. I watched a lot of YouTube videos about trading. At one point, I was super obsessed with trading, like very obsessed, to where, man, I would be like in my office at like 1 a.m. back testing. And remains a prominent concern for households and businesses. Measures of longer-term inflation expectations. But there's so much content on YouTube that's free. You know, it's just you got to be obsessed with it and just learn it that way. Watch the markets every single day. Watch the markets every day, back test, you know, that type of thing. And that you learn a lot from like watching price action, watching YouTube videos. In the near term, risks to Powell shifting balance may warrant policy adjustment. Oh, everything is taking. It's so funny. Oh, wait, the United States. Oh, that's against the Japanese yen. It's like down. I guess is that the Japanese? United States dollar against the Japanese yen is just tanking.
And other labor market measures allows us to proceed carefully as we consider changes to our policy stance.
What's backtesting? Backtesting is like when you have a strategy and you just go back in history and you backtest that strategy to see, you know, days that it worked. Now you can either do manual backtesting, which is like, it takes forever, but there are systems out there that backtest your strategy for you. You put in the stuff. I never used it. I always did manual backtesting, where I just kind of went back, you know, say back past a month, and then kind of seen within that month, you know, how well this strategy worked.
Unchanging foundation of our mandate from Congress to foster maximum employment and stable prices for the American people. Fully committed to fulfilling our statutory mandate, and the revisions to our framework will support that vision across a broad range of economic conditions.
Yeah, my strategy is like very price action based. It's a very price action based strategy. What I obviously have a major level. Ideally, what I like to see is price tap into a major level and V-shape out of it, inverse a gap. That's what I like to see. So like yesterday, this is an example of. Let me see if I can go back to yesterday, real quick.
We continue to build upon the initial consensus statement adopted in 2012 under Chairman Ben Bernanke's leadership.
So look at yesterday's price action.
Which we conduct at 5-year intervals.
I don't know where that level is though.
This year's review included 3 elements.
There's a level here somewhere. I'm not gonna go on the 15-minute, but somewhere around here there's a major level. So like this is ideally what I like to look for, was price comes in, say like a major level like this. Price comes up to a major level, taps into it, and then you get a V-shaped reversal out of that level. So see how it tapped the level and then immediately sellers stepped in? And this is called a V-shaped reversal, where boom, it's going up and then it aggressively sells off like a V, like an upside down V. So boom, sells off. We have a gap here. This gap gets inverted, and then we target, right, the next area of like liquidity, which would be like down here. And it pretty much took out this liquidity, tried to sweep up, and then sold off even more. But that's kind of what I look for in a good trade.
Meaning that inflation was not very responsive to slack in the economy.
So like when I get major levels and we don't have gaps, we don't have any major reversals, then that level gets invalidated like that.
Years following the onset of the global financial crisis in late 2008. Many here will recall the sluggish growth and painfully slow recovery of that era. It appeared highly likely that if the economy experienced even a mild downturn,
But that's pretty much what I use. Liquidity sweep. Ideally, 3 things, right? Liquidity sweep, V-shaped reversal, a gap to get inversed, and then I target a next liquidity point. That's my like. For me, that's like an A+ setup. And obviously, there's other things that depends, like how much resistance we have down there. Like, are there any gaps? And like where I look for targets, are there any gaps there that could potentially hold price up? Is there any resistance that's gonna keep price? You know, that also determines. And I typically like price to be structured in a way for there to be a straight shot to my TP. So when I get into a trade, I don't want to have any gaps in the way or any resistance, like a straight shot to my TP.
we emphasize the importance of anchored inflation, longer-term inflation expectations.
Structure has to build to tell you it's going to reverse. Well, for me, I don't think it's necessarily, I guess you can call it structure, but like, right, when you have a major level and say a gap gets formed, right, a bullish gap, it takes out a major level, and then V-shape reverses out of it. That tells you, that structure of price tells you that sellers are stepping in aggressively at that level, right? Because you have no idea. These major levels, you have no idea if price is going to keep pushing through them or price is going to reverse. All you can do is look at price action. So when it taps a major level, right, V-shape reverses out of it, means a lot of sellers stepped in, inverses a gap. I target the next internal liquidity because in my mind, to inverse that gap, there's a high chance it's going to go whatever that next liquidity is to take it out to maybe move back up. So that's how I scalp it. Now there are other traders that trade a similar strategy, but they go for like longer TPs and stuff. But for me, I try to go off highest probability.
Combined with the unwinding of pandemic supply disruptions, contributed to inflation moving much closer to our target without the painful rise in unemployment that has accompanied previous efforts to counter high inflation.
42K in seconds. This is the kind of price action that you can get wrecked, even if you're sized down. Look at the freaking volatility of this crap.
In the face of large shocks.
Every box, this is why I have every box
Than was the case during
for 1 micro is $20. Every box is 10 points. Look at this. This is insane.
policy rate is restrictive, modestly
Every box is 10 points. So the smallest contract you can possibly take, like this rip up. Look at that. 20, 40, 60, 80, 100, 20, 40,
and other factors
60. Like,
saving and investment.
that's like $160 move right there with 1 micro, the smallest contract you could possibly take. So it's like,
Response to high inflation.
it's insanely volatile.
An overly specific set of economic conditions may have led to some confusion, and as a result, we made several important changes to the consensus statement to reflect that insight. First,
Dow Jones is great, but I'm chilling today. Powell plus Trump.
was a defining feature of the economic.
That's good. That's for sure. If you
We noted that our monetary policy strategy is designed
see, that's how that's like a sign that you know, you've been trading for a while. That's a sign, because when somebody can come in and say, "Hey, today we have this, and Trump, Powell speaking this," I'm not gonna take a trade today. I'm just gonna be, that's most new traders can't do that. So when somebody says that, you already know they've been trading for a while.
particularly if the federal fund
Like, I guarantee you there are so many new traders that jumped in. And like they jumped in right here, right? Oh, market's pushing up. All right, let me jump in right here. They jumped in right here. Market started to tank. They got stopped out, and then market ripped back up.
there was nothing intentional.
Or maybe they got lucky. Who knows? Maybe they got lucky and they made a decent amount of money. And then they're going to do this next time, and then they're going to get wrecked. Like, eventually they're going to get wrecked.
2021.
Yeah, I've been trading 3+ years. Exactly. I can tell right away.
Success in bringing down inflation.
That's almost like something that comes from just experience. At least for me, what I learned, being able to come into the market and sit on your hands and not take a trade just comes from experience.
And limit the risk of deflation when the economy weakens.
Like, I really don't mind. Personally, me, what would you rather do? I would rather not take a trade and go into my weekend, right? Fine. Rather than take a dumb trade and then go into my weekend and then, be red and then be thinking about, why did I do that? Why did I do that? Why did I do that?
Sound and stable economy and supports the well-being of all Americans. This
I'm up on the week and, oh, you got funded? Nice.
the past 5 years have been
Yeah, and it's like with funded accounts, you got to be more careful,
especially on those
Like, I have 10 funded accounts, so,
of necessity.
I have some money invested. I don't want to just blow my accounts. If I see a good setup, I'll take the trade. But as of now, there's nothing for me to take. That how I see the market, what I want to see.
Of the natural rate of
I go to paper trading after I'm done trading for the day. Helps me with overtrade. Yeah, that's good. That's a good thing too. Like, if you want to keep trading and kind of back testing your strategy and seeing, going to paper trading
estimates of its sustainable level,
is great.
with inflation running persistently below our 2% target. In the absence of inflationary pressure,
We're getting a.
it might not be necessary to tighten
What level is that? It's reversing off a level I have marked out on my.
real-time estimates.
Let me see real quick.
We still have that view, but the term shortfalls was not
Ah, that's nothing.
as intended.
There is a.
Patience challenges
Let me see. I think there is a major level.
was not intended as a commitment
I have a level marked out on this chart. It's reversing from.
to ignore labor market tightness. Accordingly, we removed shortfalls from our statement. Instead, the revised document now states more precisely,
Yeah, we have that. Let me see if I can see it on the 15-minute chart here.
run at times above real-time assessments of maximum employment without
Yeah.
necessarily,
So this level right here, I have it marked out on the other chart.
of course,
I still wouldn't have taken this trade. Doesn't matter. I'm not too fond of it.
factors pose risks to price stability.
But it's reversing off this level. So see, like, how price likes to reverse off of bigger levels.
The highest level of employment that can be achieved on a sustained
Like,
basis in a context of price stability.
let me move this over.
Focus on promoting a strong labor market underscores
And this is kind of what I have marked out on this chart. I'll zoom in a little bit.
broad-based
Hold on, let me.
opportunities and benefits for all Americans. The feedback
You see this level right here, right?
reinforced the value of a strong
We have a gap. So right here we have pretty much, this is a level to where, right, price kind of sold off from. And there's a gap right there. And there's a resistance right there. Right? So I wouldn't have taken this trade. Doesn't matter. I'm just showing you, like, these big levels. These big levels.
with the original 2012
So when you go down to a 1-minute chart,
extent of departures from our goals and potentially
right, you kind of have a level like that. And you can kind of see price takes out the level. And this is kind of what I look for.
mandate.
I would like to look for a better level, but
Policy decisions today
this is essentially kind of what I like to look for. So something like this, I would have I could have scalped,
was the overriding
right?
concern.
Look what happened.
In addition to these changes, there is a great deal of
This is kind of a good example of what I look for in a trade, right?
how we interpret
And this is the price action I wouldn't want to. But look what happens. We have a major level. This is what I like to see. Price comes up to the major level and V-shape reverses out of it. So what is this telling you? This is telling you the sellers are stepping in aggressively at that level. It's sweeping that level. It's not closing heavy above it, right? It's pushing up to it. It formed this bullish gap right here. V-shaped, reversed out of it, and it closed below that gap. So as price closes right there below that gap, in my mind, where do I think the next level? Where is the highest probability that price is going to go to? Highest probability is this low right here.
dual mandate goal.
This low is like the highest probability that price will probably push to. Now, can it hold this as support? Yes, it's possible. But as long as it stays below this gap, in my mind, price is going to go at least to this low, maybe even to this low, right?
Also providing a central
So you can have a hard stop, and if price ends up closing above the gap, you can get out early. But that's kind of what I like to look for. Now, that level, I mean, paired with Powell speaking, I don't know.
every 5 years. There's nothing magic about the 5-year pace.
But that is a...
Policymakers to reassess.
It is a pretty big level, and you can kind of see, and this is why I say looking at price action is important, watching the chart. Like, oh, price is reversing. Why is price reversing there? Right? We got a 15-minute level here, and there's a gap. So it pretty much, sorry, 15-minute, it pretty much tapped into this gap right here, right? So price pushed up, tapped into this gap, resistance, sold off.
This is the 8th time I've had the honor to speak from this podium. Each year, this symposium offers the opportunity for Fed leaders to hear ideas from leading economic thinkers and focus on the challenges we face.
The other time frames,
Fed was
I mean, yeah, I usually stay like 1 and 15-minute are my
40 years ago.
time frames I look at.
I'm so proud to honor that tradition. Thank you very much.
But yeah, I mean, you can look at other time frames and see what's going on. I don't even know where that level is on a...
Remarks. What a Jackson Hole speech that was. This is Bloomberg Surveillance on television and radio. Live from Jackson Hole, Wyoming. What we heard there is they are prepared to move rates lower on the heels of their dual mandate.
I personally don't think you should have more than 2 time frames you look at. Right? Because price is like fractal, right? All a smaller time frame is going to show you just, you know, smaller price action. But I really like that balance between 1 minute and 15-minute. I look for 15-minute levels, major levels where price can, you know, take out these major levels. And then on the 1 minute, I go in for my like sniper entries on the 1 minute.
Other news, President Trump has been tweeting saying that if Lisa Cook, Fed governor, doesn't resign, he will fire her. There also was some drama in the main hall.
Look at 1 minute, 3 minute, 5 minute, 15-minute for entries, but I mainly mark liquidity on 1 hour and 30 minutes. Yeah, so higher time frame levels obviously are going to hold more weight the higher the time frame. But yeah, I mean, you just don't want to. You don't want to have too much contradictions, meaning like you don't want to have too much stuff, because sometimes like, oh, an entry on like a 5 minute looks very good, or say an entry on like a 1 minute looks very good, and then a 5 minute you're like, I don't know, and then you look at a 15 minute and you're like, nah, and then I won't take the trade. And sometimes like, it gets a little more cloudy, like, but when you have two time frames you kind of look at. And I keep it simple. Liquidity sweep, 15-minute levels, 1 minute, and then I drop to the 1 minute and see how price reacts at those levels on the 1 minute. So now price, right, is kind of, look at these pivot points. Bouncing straight off that pivot point. Still helps me stay within a certain setup. Yeah, if it helps you, that's good. I guess it depends on what strategy you use and how you know. I assume those for options and trading you speak of is generally.
So it hasn't really changed my view. What I will say is, in the last couple weeks and talking to other people on the buy side and really getting a sense for investors.
Yeah, the stuff I'm talking about, this applies to all trading, whatever you trade. I mean, I trade futures, but I mean, this kind of everything I've been saying applies to options, applies to every type of trading.
The Fed is on path to start easing rates again or proceed with the cycle. But I don't think that the rest of the meetings to the end of this year,
but yeah,
2026, are done deals yet. So much is going to be data dependent.
Starting to push up. Here, give me a second. I'll be back in a minute.
Year certainty for September and on for the balance of the year, and I think we just have to watch the data.
You're watching the data in the Heritage Citigroup Economics. This is Will Bowder, Catherine Mann out the Bank of England and all. There's a complete international and holistic view. Is this ginormous, that's a fancy word, CFA word, folks, this ginormous investment that we're seeing in AI, is the certitudes of this summer, are they at risk given the tumult?
Well, I mean, Tommy, point out something. The market's been really crowded. Most investor segments have been crowded around these secular themes. And for good reason, right? These companies are putting up great numbers. Every company across every industry is investing in AI and technology. So if you had uncertainty around policy or economic growth or geopolitical tensions or international relations or, fractures in the U.S. consumer, everyone was crowded in this space. That said, they're not crowded because these are companies with they're crowded because these companies have fundamentals and the power.
Sorry, Morgan. Still new on Vista like 6 years lately. Oh, that's fine. I don't mind questions. I don't.
If we get inflation, that's a little bit too perky. If we get rotations in the market, I think.
How long you been trading? So I've been trading for a long time, but like taking it seriously, only 2 years taking it seriously. Before I used to trade just for I still trade for fun, but I used to not take it as seriously back then. Because back then, trading was never really, a viable option, right? Now trading has become, the opportunity to be able to trade, the doors have opened up lately. But back when I started to trade, you needed to put in thousands of dollars to, to be able to trade. So, on a live account, meaning. So, there was none of these, funded accounts, really, none of that. So, when I started trading, I wasn't interested in trading a long time ago, and I was kind of learning about it here and there. But taking it seriously, past 2 years is kind of taking it seriously where I come into the market every single day and I watch the market every single day for the past 2 years. Back what I used to do, this was when I traded stocks. When I used to trade stocks, what I used to do is when Elon would say something stupid, I would just buy. Because every time Elon said something dumb, the price of Tesla would tank. And I would know that's a perfect buying opportunity. Because it's just it's going to go back up. Because the only reason price went down is because he said something dumb. And I would buy, he would say something dumb, I would buy Tesla, and then I would sell. after it rips back up.
And right now, what you are seeing is almost a certainty priced in for a rate cut next month. But Kate, one other thing you're seeing is weakness in the dollar on the heels of this. Yeah. Do you expect that to be very much an ongoing theme, and it just kind of edifies it, given that this is taking the more dovish approach?
Yeah, we had a pause in terms of the weakening of the dollar after really vicious weakening in the first part of this year.
Yeah, I used to do, man, I used to do penny stocks, you know. I've traded options, I've done.
If the market really believes with high conviction that we're going to continue on a rate cutting cycle, I think it's fair to assume that the dollar would weaken a little bit.
Is Trump, I'm looking at Jackson Hole, Powell's already done. Is he like, that was it? He spoke for like,
We'll see a little bit more of that adjustment. On balance, though, I think we're going to see appreciation in some
does Forex Factory say when Trump is speaking?
space, even as the dollar weakens a little bit. And I'm hedging some of the stuff and some of the concerns I have in the portfolio around uncertainty and perhaps pick up in volatility in September into the beginning of October with a little bit of gold.
Interesting. We'll catch up with Kate Moore. She's going to.
Oh yeah, Trump speaks at 12.
Investment officer as we.
Bro, today's, man.
All the headlines and get some commentary. Joining us now is someone.
Wait, is Trump speaking at the symposium, or that's just,
Fed President James Bullard, who recently
or he's just speaking in general?
talking about his preference for 100 basis points of rate
But
cuts
12 o'clock is when Trump is supposed to be
26,
speaking.
also a potential contender, I should say, to be the next Fed chair. Jim, how much are you seeing what we heard from Fed Chair Jay Powell and seeing anything different that you would really say if you were at that podium?
He used
He's always late. Yeah, that's true.
solidify expectations for 25 basis points in September. I was expecting that.
What is Price gonna do here?
Expecting that. He leaned into the most recent labor market report, which was very soft. And so I think that's
We never even took out this last area of
say too much
liquidity. So see, we took out the first level.
what you want to do.
We took out the first level and failed to take out the next level.
I have said 100 basis points, going into 2026. I think you could adjust as you go forward.
But it is such a, the thing that happens in politics, like these power moves, it's so funny. Like, remember when recently Trump and Putin met together in Alaska? This was like last week or.
And that they would use the Jackson.
You know what's funny is they do these little things that are such power moves. Like, if you watch when Trump and Putin, right, were speaking and they were on their planes, people don't realize this, but the fact that Trump came out of his plane and Trump came out first and Trump was walking and he stopped and was waiting for him, and he was waiting for a little bit before Putin came out of his plane and then met Trump. So it's like, the fact that Trump had to wait for Putin was a big power move on Putin's part. Meaning, and if you realize this, a lot of times Putin is late based on how much respect he has for you, and I guess it's a thing that actually happens. Based on how much respect for you he has, determines how late he's going to be to your meeting thing. Like, for some politicians, he was super late. For some politicians, he's not really too late. But it's so funny how these little things they have, like, are power moves.
It's not that clear how much the Fed can really do providing interest rate policy for the whole economy. If you change
It's obvious.
structure that affects
Yeah, some people, believe it or not, some people don't realize it. Like, even the handshakes, how they shake hands is a power move, you know?
that's been something we've had to wrestle with, and I've actually done research on it
And it shows in the charts.
to understand it better from my point of view.
Look at that, Powell. Look at Powell. Powell comes out with a purple tie and the market rips. Imagine that. Imagine having that much power to where all you have to do is come up on stage and the market rips like 400 points.
You're at Purdue executing online technology education every single
Actually, more than 400. How much did the market rip?
technology
All right, from the time, I can't even count it. It's so little. All right, we ripped from 10 a.m. pretty much. 10, 20, 30, 40, 50,
Oh yeah, I think that the AI
100, 10, 20, 30, 40, 50, 60, 70, 200. 300. Yeah, pretty much 400 points. That's freaking wild. Bro, just blew up my account. Didn't know something was happening today. Oh my gosh. Dude, can you imagine being stuck in that? You're sitting there. Hey, I recently got caught in the same thing. I was in a trade and I didn't know news was coming out, and all of a sudden the freaking red candle printed and I'm like, what the flip just happened? Yeah, be careful with news. You gotta be careful. Forex Factory, go on Forex Factory every single morning and check what times big news events is coming out. Red folder news events are big news events. So preferably stay out of any kind of trade during red folder news. Yeah, you gotta always look. If you don't look, you're gonna get caught in something that... Yeah, no problem. Traders add to September Fed cutbacks. Oh, that's... the heck? If you don't have Forex Factory, you're sleeping. Yeah, you gotta have some sort of... That's a big part of understanding if we have big news. And all right, we're starting to push back up. Use market news, FOMCs, and look for quarter reports. I mean, there's stuff that like traders pay for too. There's like subscriptions you can have, but I don't really. All I care for is like big news events, not to be in a trade. I don't really care about like the data of the news events and all that. Like I don't really look at the numbers per se of. Cause I'm not holding long term. I get in a trade, I have my target, take profit, and I walk away. So I just go based on how price is moving at the time. Yeah, if you're like a risk manager or something and you manage multiple days, then stuff like that could impact, you know. You got to be careful, and you have to have more data. But yeah, for somebody like me that gets into a trade and, you know, 5 minutes later I'm out of my trade, it doesn't really. The only thing I have to be careful is not getting caught in a news event during those 5 minutes. Oh man, all right. We're still pushing kind of, but this whole I guess this would have kind of been a good trade now. This would have been a good trade, but I don't know if I would have. I don't know. I don't really like the. I don't like the fact that Powell was speaking the way we were moving, just so volatile. I'd be scared to do. I like the way I trade because I don't like to hold for like people hold for like multiple days and stuff like that. Now if I just put like an investment into S&P 500 and just keep it there without, that's different. But like yeah, holding a trade when I'm off the charts, I just don't want to be thinking about the market. Like when I'm off the market, I don't want to be thinking about how my trade is going. Yeah. Whatever style works. Some people hate scalping. Some people cannot scalp. Based on their psychology and all that, they cannot scalp. They're just not good at it. Some people like swing trading. It depends depends what you like with how your psychology is. Probably would have traded today if it was just one of them, but Jerome Powell.
I guess, or something if there wasn't a conviction. So
Trump and Powell? Yeah.
these kind
This whole thing kind of screwed it up. There was, I guess this trade was decent. I honestly didn't even see that there was a level here. The only reason I saw that there was a level here is because I looked on my other chart and I had that level marked out from like a previous day or something, but I guess this would have been a okay trade to take, but I just didn't like that he was talking. I don't like taking trades while Powell's talking.
Supporting the labor market than containing inflation. And some people are worried that if the Fed does cut by 50, 75, 100 basis points, as you
This would have been what? Risk
you could see a move
10.
up in long end yields akin to what we saw
60 point risk for
you did see yields along the long end moving up in response to near-term Fed rate cuts.
it's like a 1-to-1 risk to reward ratio pretty much.
that would definitely be a concern, and that's the tricky part of this business is that you think you're pursuing a dovish policy at the short end, but the long end.
We're trying to push back up. Like I said, that the next kind of major level for me is all the way up there at 23,840. This blue line I have marked out. It's gonna take a while for price to. Right now, it's hovering over this major level. Trying to see what it's gonna do there.
If they proceed carefully over the remainder of 25 and the first half of 2026.
I don't want to get out front of the debate here at the moment, Jim Bullard, but I would say to Chairman Bullard and Mike McKee, I got to turn to you. You and I used to sit and look at the dots.
You love it? Bro, I don't know. I got wrecked when I used to try to trade when Powell talked. I got wrecked. Sometimes it works out so nice. And sometimes it's just the volatility. Sometimes it's the volatility. You can even size down and you're still risking a lot of money sizing down.
I think this could be done better. This was discussed at the framework.
This isn't even the craziest. I've seen more volatile than this.
Very nice.
I've seen price more volatile than this. So it's like,
A quarterly monetary policy report.
and this is already pretty volatile.
Forecast. I think all of that could be done. I've advocated that for a long time, and so I think that would sort of clear up some of
Do you have a no? I don't have a Discord. I trade every
Okay, this is really, really important, folks. As Jim Bullard made
I trade every day live.
with a small,
That's pretty much what I do.
forceful on regime change.
I trade live every day.
Get a new Fed away from the guessing and the certitude and the silly parlor game of it, Jim Bullard. With great respect, how do we get to?
Right now, I'm gonna start focusing more. So before I had that valuation account, I'm gonna start focusing more on my funded accounts. I've been kind of like not focused on those accounts. So
switching is a great way to think about
because I'm gonna be more focused on my funded accounts, copy trading 10 of them, I'm gonna be like pretty patient for the moves. I'm not gonna take stupid trades. So I'm gonna wait for really good setups and then take those.
let's say slow growth and very low interest rates, and then you might switch to another time with faster growth and higher interest rates. I think understanding
But essentially, like this kind of price action, something like this, right?
is a great
Something like this, if it would have happened even here before Powell was talking, that's what I was looking for. This is what I was looking for,
I think it's very
right? This is what I was looking for when price came up to this level, pre-market highs,
Jim Bullard, former Fed
right? When price came up to pre-market highs, I was looking for that V-shaped reversal out of it, but
right now in markets, you can see a
we never got it.
to the opening of the door to a potential rate cut next month, and potentially more. You could see equities surging higher across the different
10 accounts
indexes,
from a
some of the
SAE
more
broker.
interest rates.
No, I have 10 accounts from Apex.
You can see 10-year
Apex
yields
Trader Funding.
now about 6 basis
I have
points
10 funded accounts.
and down 10 basis points as people look to the prospect of the Fed looking
The website's called Forex Factory.
tariffs. You can see the dollar markedly weaker, 117
Um,
on the euro.
Expecting any bearish moves? As of now, no. We're very bullish right now. Anytime we're above VWAP, this overall sentiment's pretty bullish on the day. If we're above VWAP,
Chief Investment Officer Kate Moore
that's not to say I don't take any shorts,
is a little bit chilly
just based off on my strategy. But I do take shorts even if we're above VWAP. But
in terms of perspective.
We have to be far away from view op, because a lot of times around view op is where chop happens. Right now we're pretty bullish. It's just ripping. Trader is simple when you have a plan. 90% is really psychology. Yeah, you have to have a plan. Yeah, it gets a lot. Like, I don't know if simple would be the word I would say. I guess it is simple. It's simple but hard at the same time. Like, with the word simple, I don't want people to think when you say simple that like you can reach a point in your trading where you're like, man, this is like, I figured it out. I'm just making money constantly. Like, this is the easiest thing in the world. You know, it gets hard when you go through drawdown. It gets hard when you feel like your strategy isn't working anymore. But that's just because you're going through some drawdown, which is a part of statistics. It's gonna happen. But trading is simple in a sense of like, all you have to do is figure out a strategy that you like and stick to that strategy. And if it works, stick to that strategy and wait for that strategy. The hard part is waiting for the setups, sitting on your hands for possibly a day, 2 days sometimes, sitting on your hands because there's no trades to take. Not forcing things just to force things. Not taking trades, to get that dopamine hit. If you have a losing day, just stop. Trust me. Yeah, I guess like those kind of things does get simple. Like when you trade a lot and you have the experience, right? You get wrecked so many times from taking revenge trading, taking dumb trades, that in the end you become more patient as a trader in the long run. Like, it is for me, like for somebody that's just beginning trading, it is very hard for them to sit and watch price action and not take a trade. Like, see this big move right here and not take any trade because it's just not part of your system, right? It's very hard for beginners to do that. For me, it's easy because I know what I'm looking for, and if I see what I'm looking for, I take the trade. If I don't see it, I'll sit on my hands. Here, just give me a second.
First to Dr. Bullen and then to Dr. Moore. Jim Bullen, as simple as I can, all of my conversations, whether Joachim Nagel, Bundesbank, Kate Moore, Citigroup, and on, is about an elevated or persistent nominal GDP. Do you frame out that we're going to have an animal spirit in the country, whether it's better real growth, okay inflation, too much inflation, okay real growth, but what we're talking about forward is an elevated nominal GDP. If you think real growth is going to be faster, then yes.
All right, we're breaking out of that high now.
Inflation target over that period, so yeah, you would see higher, faster.
Yeah, dude, it's so crazy how a lot of traders go through the same thing. It's like I was exactly the same way. When I was new to trading, I was ready to take every single move in the market. In this kind of price action, if I didn't take a trade somewhere in here, I felt like I was missing out. FOMO, right? Now I don't care. I look for, right? Looking in hindsight now, I could have possibly taken this trade right here, but since Powell was talking, I mean, I didn't even see this level. I didn't have this level marked out. The only reason I realized there's a trade here, I had it marked out on my other chart, but I was answering questions. I didn't even realize there's a level there. But regardless, it's Powell's talking. I'd rather stay out of it.
And we're seeing
I'd rather come back, you know, another day when
across, segments of different households.
he's not talking and we don't get these massive moves.
Those that have made the investments are reaping dividends from it. So, yes, we may have these good headlines.
Yeah, all you need is 1 to 2 setups a day. 1 to 2 setups a day, take your trades, walk away. That's it.
Over the next couple quarters.
We are looking at a market that is moving. We are looking at headlines that are coming, and I want to bring this to you, that Canada is planning to remove retaliatory tariffs.
Can you explain your strategy? Yeah, give me a second. I'll explain it.
President Trump, and there
Teach
is
101. No, I don't do any mentorships. I don't do any mentor. I just trade live, right? I just trade live every day. I don't have a Discord, you know. I'll never try to get you to buy a course, try to buy something from me. I'll never ask for money.
And that's one of the reasons why there has been a focus on the labor market. Fed Chair
But
speaking, just moments ago, really
what was I gonna say?
on the complications.
But yeah, I don't have a Discord or anything. I just trade live.
Appears to be in balance. It is a curious kind of balance that results from a marked slowing in both the supply of and demand for workers. This unusual situation suggests that downside risks to employment are rising. And if those risks materialize, they can do
Is it weird that I'm in consistent progress overnight?
higher layoffs
No, it ain't weird.
employment.
Some people might say that Fed Chair Jay Powell is coming around to the
That's a sometimes people's strategies work better in like Asia session or you know.
taking priority
If your strategy works better in Asia session, then yeah, for sure trade it.
taken off, and that's what we're seeing a little bit in terms of negotiation this morning.
Well, the give and the take, and it goes back to Kate Moore's
I wouldn't personally mess with options or yeah, I used to trade options. I don't like time decay. I hated the time decay in options. Like I used to scalp with options. The time decay sucks because if you get stuck in a trade sideways movement and you have same day expirations, it could really wreck you. So futures, I like it. Futures, there's no time decay, no nothing, and there's prop firms where you can, you know, you can buy evaluations, get funded, get payouts with prop firms.
Oh, now is the time to definitely
Essentially, if you know how to trade, you can invest very little money and get big payouts.
get on with your day. I do want to finish there.
But I don't see a reason to go back to. I don't see a reason to do options when there's so much possibility with futures and stuff.
And that right now,
You know,
the path of travel is lower from where
I mean, you had traders getting.
higher again, and so
You had a couple traders get like. One guy got like what, almost $2 million payout. Another guy got 1 point something million dollar payout. Like the possibility is wild. The fact that you can get $1 million payout with a prop firm is crazy.
Markets like that for now. And then you've got Canada and Mexico. Looks like we're headed toward renegotiation of the USMCA, which I think would be
Backtracked all week, put a sell in the 15-minute low. Only I wake up, nice profit. Yeah, that's good.
anyway.
That's if it works, it works.
A little bit more settled than it was earlier this year, and I think markets are liking that. That's making it easier.
Did you jump in a sell here? No, it's taking out this high, but the ideal sell would have been for me, right? This major level
President
price kind of
so much for being with us
tapped into this, and this is what I look for. Oh, the person who asked kind of my strategy.
going and citywide.
I mark out 15-minute level. I mark out big levels on a 15-minute time frame. So something like this, right? You have a big level, price comes up, essentially tapping into that level, taking out liquidity, and then a V-shaped reversal out of that level. So you see immediately sellers stepped in aggressively. We inversed this bullish gap right here. We inversed it. So targeting, you know, lower, whatever that lower level liquidity is, which would be kind of down here. Be around a 1-to-1 TP.
expectations for end tariffs.
That's what I look for.
This, even if we're at a lower rate, I'm just going to say 15% effective tariffs relative to where expectations were in the beginning of April. I think we have to keep our eye on the sectoral tariffs, and this has potentially some of the biggest impact for overall earnings. And those are sticky, we know, and are likely to endure through multiple different administrations. So
Oh, you got in on it?
this, given
Nice. I didn't take this trade.
reciprocal tariffs,
I didn't take this trade. I just Powell was talking and I didn't even realize there's a level. I marked it out now, but my level was marked out on my other chart and I didn't even see that I had a level there. And I was answering questions and by the time I noticed it, I missed it. I'm fine. It is what it is.
said that this actually is a time where potentially
But essentially, you know, that's what I look for. That kind of price action right there.
And what could eventually come would be a rate cut in September. Mike,
This is NASDAQ.
the market is pricing in.
That's what the market's pricing in, and I'm fairly certain that's what Chair Powell is referring to. But because we're fair and balanced, I have to point out that Carl Weinberg has messaged in from High Frequency Economics and said the chair didn't say cut. He said
Yeah, this is NASDAQ. So
rates as well. Probably not in
we're still looking like we want to go up.
I'm not thinking that that's actually.
We're at 11 o'clock. I may hop off soon. I don't know. My head's been freaking
Former vice chairman here as well.
past like.
What we heard
Ugh.
from Jim Bullitt and from Kate Moore, Mike McKee, to me, what is so interesting
I think I'm dehydrated.
is the outcome.
I drink too much. I drink too much like coffee and freaking stuff that dehydrates you,
Today, it's
and then my head starts hurting.
Well, here's the thing.
I need to drink some. I need some liquid IV.
It's not that the other countries are paying it. We're all paying it because it's a tax on basically the consumer in the importing country. But what the administration seems to have done
But yeah, like
is made up for the deficit we're going to get from the big beautiful bill by raising everyone's taxes and not telling them
no, I'm chilling out. I think I'm not gonna take. I'm pretty much done. It's 11 o'clock too. The other level I had marked out was we have a big level up there, but obviously I'm not gonna wait. I'm not gonna wait for price to try to come up to that level. It may not even come up to that level. So
if this is working and adding money to the Treasury's coffers, then this president could use
bearish SMT divergence. I never looked at SMT divergence. I know a lot of traders use it. I never really used it. I don't know if it's worth something for me to.
the uncertainty it brings.
I don't know.
Well, let's take a listen to what Fed Chair Jerome Powell had to say.
No, I don't.
on tariffs and what the impact is on the economy.
I don't watch ES, but I know like I know people look. I know what a SMT divergence is, but I don't know. I just never. I guess it's because I like the people that use SMTs. They take like longer TPs and stuff. For me, I don't use it because I scalp, right? So like for this trade right here, this would have been like I would have got in at the close of this IFEG, right? The inverse of this 1 minute candle. You get in, right? Have a hard stop above the highs, and then I have what's called like a soft stop. If price ends up coming up and closing above the gap, I end up getting out early to protect profits. Because if it closes above the gap, it's probably going to go for those highs. So just to protect some of my, keep my losses small, I would get out if it closes above the gap. And then I would just have like a 1-to-1 ratio. These lows would probably be my target right here. So I would get in right here at the close of this 1 minute and target around a 1-to-1 at these lows. Divergence is very reliable. I should take a look at it. I mean, I don't know. Is it gonna help with scalping though? Like I know it helps with people that have like multiple TPs and they look for bigger moves. Like, you know, London lows got swept. Now I'm looking for, you know, the highs up there, and they'll sit in a trade for a long time. I guess no. That's people. I know people who they look for SMTs on a 1 minute divergence. So I guess you could do it on a 1 minute too. I don't know. Maybe it's something I should take a look at. Divergence plus inverse. Huh. I mean, I'm gonna probably do some this weekend. I'm gonna just look over this past week to see what. Try to maybe see how it works. Do some back testing. See if that's something that would be helpful in incorporating into my strategy. I'm open to if it's something that I can back test and I see that it would help my strategy, I would for sure, you know, want to incorporate it. And I just would have to pull up ES on a chart here. I just need more room. You can't just rely on SMT. You must get IFEG and displacement as well. So would it work? Say what like if I do It takes out a 15-minute level like this, SMT, and then V-shape reversal out of it.
At this point, we also are dealing with the
Which I guess, I don't know, would that be considered displacement if you, because displacement, I guess it could be considered.
President Trump came out with this truth post saying that he will fire Lisa Cook if she doesn't resign. We did hear reports that in the Jackson Lake Lodge in the lobby, that James Fishback was screaming at Lisa Cook that why did she commit?
Does anyone know what the output was? I wasn't listening to what Powell was saying, but I was. I don't think people. The market's not really expecting him to cut rates. Like I said, last week or whatever, the economic data that came out showed that inflation is rising. It's not really slowing down, so it's not something I think that Powell is gonna want to cut rates. But who knows? I mean, I don't know. That's what the sentiment is kind of right now. Maybe he said something. I wasn't listening. Zoom call. I'm live every day.
Very valuable. I've got two tags I want to take here that I think are important. You recently said that what matters is the institution, that this chairman and any future chairman has to protect the institution.
Yeah, it would just be hard for me to do it since I'm live.
Protect the institution for the next chairman.
Well, I think first and foremost, it's to have in place a plan.
But I mean, you can hop into the live and ask questions and stuff, and
Expectations of price stability. I think the chair was right today to emphasize that the Fed has to focus on getting.
we're still pushing. Right now, we're still. Look on the 15-minute.
Employment. I've also written, Tom, that the Fed is
We're holding. I mean, we're holding this major level. We pushed above this major level, and we're holding it. So, wanting to continue going up.
right now of the institution.
Right. Well, this is really important because it's as fractious as a meeting of the bond team at PIMCO. In the middle of the speech, Powell channeled a few years ago at PIMCO the new normal. For a moment, I thought Mohammed Alarian had parachuted in to write the speech. What is your
Did you take any trades? No, I didn't take any trades. There was one trade I could have taken. This one right here. I kind of missed it.
Would be inflation moving down towards the 2% target, which would let the next Fed chair cut rates down towards a neutral level. You know, PIMCO in 2014, we rolled out the idea of a new neutral, and we've been operating in that new neutral world now for more than a decade. And so I think well-anchored inflation expectations, getting tariffs in the rear view mirror would allow the Fed to cut rates by probably 150 basis points from here and achieving that ultimate soft landing. So I think that would be a good new normal destination for the next Fed chair.
What risks are there to that, given what we're seeing with the dollar, given the fact that we really have a very high level of uncertainty around which tariffs are going to stick and how much is going to get passed along to consumers?
Sure, and I think the chair was right to point out that we are seeing
Yeah, we can.
showing up in the price.
We could set something up. Maybe somebody join my live or something.
Extent with a decline in services inflation. Again, I think where they are focused is to make sure that what is an inevitable increase in the price level from tariffs
We're pushing through it.
over time results
We're just making higher
inflation.
higher lows. And you can kind of see what's going on here, right? We took out this internal low, but we didn't take out this low, and then we're kind of now making higher lows.
I think it's important to mention within the market check that the market is putting on steam here an hour after the beginning of the speech.
Do you mostly buy or sell? I do both.
Headlines, the Dow lifting up. I'm not told I can't leave Jackson Hole unless Dow goes up 1,000 points.
I do both. Whatever the market gives me, I do both.
Another 6 hours.
I sell, I buy, short.
What this does in terms of the currency ramifications.
Yeah, I don't know what I'm gonna do unless how the market. I set my levels in the morning when I come on the chart. I set my major levels of interest, and then I just wait for price to come to one of those levels, and then see how price reacts off that level. So either price is gonna tank through that level, and I'm not gonna take a trade, or price takes that level out, V-shape reverses out of it, IFEG, entry, next liquidity. Boom. get in, take my profit, and move on with my day.
Well, you know, I think one of our themes at PIMCO is that we're in a world where taking advantage of a global opportunity set.
Yeah, I trade NASDAQ. I trade NASDAQ every day.
Makes sense to focus on
whatever the market gives you, yeah. And the reason I like this too is like, right? Most people wake up and they're trying to find a bias, like, oh, I think market's gonna go up today, and they're just like, you know, based on liquidity, we have a lot of liquidity up there. I think markets wants to go up today. And when you have like a very strong bias to one direction, and you try to force trades to that direction when the market's just not giving you, you know, I don't like that. I wake up and I'm unbiased. In the morning, I'm typically unbiased. I don't care where the market goes. If it goes up, it goes down. I don't give a crap. I have my level set. If the market comes to that level, it reacts off that level, like here, right? Market came up to the level, right? Bullish gap gets inversed, V-shaped reversal out of it. Next liquidity point, 1-to-1 is all you don't need a 1 to 10 risk to reward. So, but that's my model. That's what I look for. Essentially three things, right? I'll be here. Yeah, I'll be here Monday. Yeah, I start live streaming around 9:30. Sometimes exactly 9:30. Sometimes a couple minutes before, but pretty much at 9:30. Yeah, I start live streaming. My strategy is based on bias. It's not working so well. Yeah, I don't like bias because unless you're somebody who can really shift your bias or you're experienced where you can shift your bias super fast. But I think what hurts a lot of people is when they have a certain bias and they just stick to that bias. No matter if the market structure, like, you know, market's tanking, but no, my bias is longs. I'm going in long here. You're always trying to catch like a falling knife. You're not waiting for the market to give you a trade. You're trying to predict the market and force the market to go in a certain way, which you can't do. You just have to wait for the market to come to you, to come to your level, whatever. And you wait for the market to do what you want to see it do to confirm that for your bias, like a confirmation. Yeah, market can change at any moment. You can be like, you know, we can be bullish at one moment and then out of nowhere, right? Trump says something and then the market tanks and now we're bearish.
By the time we get done with the show today, we're going to have Tracy Alloway.
I think that maybe. We'll find out. We will.
But
Sitting here with us. I'm sure
just joined today and missed your model. Yeah, so for those who are new, pretty much what I look for essentially is three things I look for. I have a 15-minute major level, right? And with that 15-minute major level, I look for liquidity to get taken out. And then liquidity get taken out, V-shaped reversal out of it, and a gap to get inversed, and I target the next area of liquidity, whatever that area is. So this is a perfect example right here. You have a major level, right? We push into that major level, a bullish gap gets formed, we V-shape reverse out of that level, sellers step in aggressively, we inverse this gap, right? Highest probability, a 1-to-1 for price to potentially come down here and at least take out this liquidity here. So like down here would be my profit target, like a 1-to-1 ratio. And then, right, you have the next liquidity here, but you see this last liquidity, it didn't take it out. It only took out the first one. Took out the first one, came down, and never swept the last one, and then moved right back up. So I just go based off what the highest probability is. That's it. Man, I need to get some retail traders generally are the liquidity. Yeah, I mean, that's, yeah. A lot of times if you are, it depends where you put your, you know. If you don't wait for a certain thing to happen and you just willy-nilly just go short just because it's at the top and price ends up taking you out and moving in one direction.
Chairman Alloway, and the rest. So when they're in the Oval Office and they're sitting on the couches, and President Trump is going to turn to the people he trusts here. Let's start with the Secretary of Treasury. What is Dessert going to say to him about the qualifications needed for a Trump chairman?
Well, probably from Scott Bessent's, you would hear the
Ugh. Yeah, so you just, that's why, right? The way I look at the market likes to take out liquidity and fill like imbalances, which are gaps.
A certain number of the candidates, maybe Ms. Alloway fits in that category, that have that gravitas to be able to do that. The idea that you want to cut rates is, that's not really part of it, because you wouldn't be on the list if you didn't want to cut rates at this point. So it's going to be somebody who is...
Take any trades today? No. I had one setup kind of, but Powell was kind of talking, so I just stayed out of it. I'm picky. I mean, I could have taken this trade. But I was answering questions. I didn't realize there's even a level there. And Powell was talking. I'm pretty picky now with these accounts because these are funded accounts, so I'm going to be a little picky with my trades. Yeah, I didn't know what the market is. It was moving pretty crazy for me to kind of... But looking in hindsight, yeah, I should have maybe taken that trade.
Thank you so much for being with us as we dissect that speech. It was a lot longer than his prior speeches, and it was one that signaled the beginning of a new rate-cutting cycle. They have not cut rates since December.
Yeah, this is a wild...
Just to give you a sense of what Jerome Powell
wild price action today.
in that speech, he addressed
A lot of people probably blown up accounts today, that's for sure. This is NQ Futures. NASDAQ.
When I appeared at this podium 1 year ago,
Yeah, if you took some losses today, I typically, you gotta have rules for yourself, right? Whatever rules you want to set in place based on your risk management. Typically, in my book, if you take 2 losses in a row, that's a for sure stop. Like that, you gotta stop for sure.
significant uncertainty about where all of these policies will eventually sit.
Like if you took 2 losses in a row, it's better to walk away.
Curious kind of balance that results from a marked slowing
Sometimes I even walk away after 1 loss. You know, if I have 1 loss,
consumer prices
and then like if I get another setup, I'll try to take another trade. But typically, if I take a loss, I mean, it is what it is. You just walk away.
risks may warrant adjusting our policy stance.
This has sent markets absolutely surging.
But one thing I don't like to do is, if I take a trade, right? For example, if I take a trade and I take a loss, and then another setup starts getting, like, once this liquidity gets swept, and then if I take a trade and the trade ends up stopping me out, that's it. This liquidity is done. Like, I won't try to take another trade typically, because I don't want to try to take another one and it gets stopped out again on the same setup. Then it's just like, you're just digging yourself a hole, you know? So if I see a level, I take a trade, I get stopped out, it is what it is, I'm done. With that liquidity point. Maybe if another level comes and gets hit, that's a different story, but bruh, my head is killing me, man. I probably gotta go, man. My head is like, I don't know, I'm dehydrated or what. Yeah, revenge trading never goes well. It doesn't work well.
Well, we have 2 prospective Fed chairs here joining us now. Tracy Alloway.
Any ibuprofen? No, I typically don't take it. Usually it's like when my head is hurting, usually it's either I'm dehydrated or I think I'm dehydrated. Salt is a big thing too. Sometimes take like when, especially if you work outside and stuff and you sweat a lot, you lose a lot of salt, and then you need to drink something to replenish all that. Your head starts hurting and
maybe like change the composition of the governor. There's always someone who makes a scene, but this time obviously more.
see you on Monday. Yeah, I'm probably gonna. What the heck?
There's also just more security around, which I'm sure you've noticed. Plus, there's more journalists around, which kind
PM session live? No, I'm probably not gonna go live. I don't really trade PM session. I trade just New York. I don't know. Maybe eventually I would start maybe trading more sessions or. But as of now, no, I don't. I just trade New York session.
And based on what we heard
Honestly, don't mess with fast food when doing work outside. You know what I realized? Speaking of fast food, right? It's the fries, dude. It's the fries. If you get fast food, if I get fast food and I just get like say a burger. If I just get a burger, I feel fine. If I get a burger, a soda, and fries, that's it. I'm done. I'm done. I'm gonna feel so lazy and not want to do anything. But when I just eat a burger and no fries, no nothing, I feel fine after. But obviously, fast food, yeah, it's never the best choice. But sometimes when you're busy and you just need to eat something real quick just to eat something. But that's what I've realized. Fries is what gets you. Fries is what makes you feel like crap.
Well, look, today is about the short-term cyclical, the short-term question of the cycle. And as Tracy pointed out, I think this is a very interesting moment.
Oh, I'm gonna oh, where I'm going? No, I'm gonna hop off soon. I'll be back on Monday, 9:30. Yeah, I know some people trade the power hour, which is like what, last hour of the day from 3 to 4 o'clock. Also, you get some pretty good price action, but I'm usually done. I think
the only thing I can say, or that I would feel confident.
But yeah, so that's that. But yeah, I'm gonna hop off. I'm gonna hop off. My freaking head is. I gotta replenish or something. I'll be back Monday, so when I stop by Monday, I'll be here. So that's that. Have a good weekend. Stay safe. Don't take any dumb trades. Maybe stay out of the market. Walk away. Better to go into your weekend not taking any trades on a Friday than going ham and just freaking blowing your account or losing a bunch of money because you weren't patient. So that's that. So yeah, I'll peace out. I'll see you guys on Monday.